I'm looking. Hi, everybody. Welcome to our second webinar, AgroMinds Africa Challenge. We will be presenting on the topic today, delivering a persuasive and effective agribusiness pitch. And our speaker is already seated and ready. She's Joan Thompson from Ashesi University, managing the Ashesi Incubator Venture Program. And I'm sure when she starts her presentation, she would throw more light on what she does, what she's been up to, and how she's making a difference in the lives of many people, not just in Ashesi, but through Ashesi and into Africa. And so if you're joining us, kindly share the link with your friends, colleagues, and the larger community that you know will be interested in a session like this. We will begin exactly 2:10 p.m. in about 4 minutes. So just relax and enjoy the presentation. You may also type your questions out in the chat room space, as you see on your right, and we'll take all questions and relay them to her for feedback after the presentation in an hour. Thank you very much.
Hello and good afternoon or good morning, good evening, wherever you may be at this time. We're excited to have you here. As Stephen mentioned, my name is Jewel Thompson, and I am going to be presenting to you today how to deliver an effective and persuasive pitch, especially for agribusinesses. But before we start, as Stephen mentioned earlier, we do have a chat feature to this. So if you could, please start by making this interactive and just simply sharing your name, maybe even have your venture and where you are watching from today in the chat. We will have someone monitoring that just to keep this active. I love to engage my audience. So whilst this is one where I'll be speaking to you, I do expect when we have the Q&A that you have a lot of questions or comments, or if you're just curious about something that I mentioned and you want me to expand upon it, I'll be excited to do so. So if you're ready, you're excited, you have your pen, your paper, or if you're doing this digitally, taking notes, I always tell my students, even though you're not my students, to make sure that you're capturing and retaining as much information as possible. I'm excited for the next steps. So, hello again. My name is Jewel, and I am a passionate, principled, purpose-driven business strategist and researcher. So, as my bio mentioned before, I've helped to launch over 100 businesses and counting. How did I do this? So prior to moving back to Ghana, I lived in the United States, and primarily I worked with a lot of NGOs and business development organizations to support businesses, those who were interested in starting businesses, launching their businesses, but just needed some tools and some frameworks to get them to the next step. So I spent a couple of years supporting those entrepreneurs on the ground with various training programs, matching them to funding, and getting them in a position where they can go from idea to start. And it was a great experience. And I was so curious about what was happening back home on the continent, specifically in my country of Ghana, and how entrepreneurs were faring and growing here, which sparked my interest of moving back home. So I came here with the intention to support young entrepreneurs as I was doing back in the States, and also share my insights, my knowledge, and my experience from being in a very rapidly changing and evolving startup ecosystem in Atlanta, which is where I was based at the time. So professionally right now, I work at Ashesi. I'm an assistant lecturer in the business department, focusing specifically on entrepreneurship in all areas of management when it comes to business. I manage our Ashesi Venture Incubator, and this is a project that we undertake with MIT Lab in the United States, and it's something that's funded by USAID. And in this vision, we are supporting recent graduates of Ashesi as well as alumni who are curious and passionate enough to say, I am ready to take the next step to become a full-time entrepreneur. And so they impart or participate in our one-year incubator program, which provides them with the technical assistance, business support, development, mentorship, and funding that they receive monthly so that they can participate in this one-year incubator under their national service. And it's our goal to support them, to help them move their proof of concepts into a position where they can start to develop additional traction and gain more customers. I'm also a co-founder with one of my students of a tech venture that we just launched that focuses on the mind health and wellness of young African students and young African university students. So if you're curious about that, I'll tell you about more of that later in the Q&A. And I actually just started my own poultry farm in the Eastern region. So to that one, I'm slowly learning, slowly understanding and the risks and the benefits, but it's a family business and vision of mine to have started as my way of getting back into the entrepreneurial space and vein. So I'm excited to guide you on this journey, and I hope you enjoyed my semi-pitch so that you can understand a little bit more about who I am. Now let's get down to business. So why are you in this section? A couple of things for you to be mindful of as you're listening and you're taking notes. So there's some of you that actually desire some level of funding. You're curious about, I've pitched before, but I didn't quite get the feedback or the interest as I thought I would, or I haven't pitched yet and I want to get to that point where I can pitch. There's some of you that really want to learn how to share and effectively communicate the value your business provides. And some of you are here because you're just curious. You may not have the business just yet, and maybe you're just figuring or trying to understand different ways to better position yourself to the point where you can get in front of someone and share your story or deliver your show a way to deliver your value. So there's something that I want to focus on, and I'm bringing it to the context of Ghana because this is where I'm located. So when it comes to Ghana, it being the second largest economy in the Western region, right behind Nigeria, there are a lot of investors that are excited about opportunities in Ghana. And when here in Ghana, the agricultural sector, is one of the third largest contributors to our GDP and employs about 30% of our workforce. However, when we look at the agricultural sector here, there has been somewhat of a decline over the past 3 years as it contributes to this GDP, right? So there's a level of investor confidence, not just in Ghana, but across Africa, that's somewhat waned in the sense of the increase in risk. And of course, with the volatility of something like a COVID impacting the way that we do business and the way that we handle business, there's now come a way or a more of a reason for you to really strengthen and build upon how you tell your story and how you convey the mission or the work of your business. And so we have to ensure that our businesses are ones that are designed, of course, to be more so resilient in challenging times. And you're putting those mechanisms in now, even if you're at the idea stage and you're in a position to actually grow. And when you're in a space like the agri sector, right, that's a space that most African countries, we find that as our area for progressive development. However, we find that that's where a lot of people work. So how do you differentiate yourself? What are you doing to innovate in this space and quite possibly reduce or mitigate risk for investors if you're interested in some level of additional financing? And this is where your pitch comes into play. One thing that's interesting about the investors, both that are international and local on the continent, is that they find that while there's a willingness of incubators and accelerators that exist on the continent, what they're finding is that there are a lot of ventures or businesses that just aren't quite ready. And I wanted to talk through this first before we get into the pitch, because there are a lot of you that are on here, of course, that are in various stages in your development, whether you're in the idea stage, whether you're actually participating in the market, or whether you're at the growth stage. And it is important on the back end to make sure general infrastructural things are in position for you to even deliver a strong pitch and get an investor excited about your idea and excited about the fact that you have the capacity and capability to actually execute this idea. That's actually very key, and I want you to write that down and make note of it. So when you're preparing your business, right, how do we ensure for the first step that you're mitigating risk? You need to prepare your venture for success. This happens before you begin crafting your story. So essentially, you need to begin setting benchmarks. What benchmarks do you need to hit to either break even or generate profit? Start thinking about the works and the things that you're doing within your particular agribusiness now, right? How are you tracking this? How are you testing this? How are you better understanding your production value? How are you increasing vertically? How are you transforming the way that in which you produce, right? And in that way, you begin to define your company milestones. And again, that helps you to start to reduce risk, because as you are testing, growing, building, you are then setting these benchmarks, creating these milestones and meeting them, providing a slew of evidence behind you that you can share in your story to come. And then you need to very much so understand how you create value and deliver that value to customers. There are a lot of small scale farmers. There are a lot of large scale farmers. There are those of us that are in the various aspects of the value chain within agribusiness that are doing works that are fairly similar. So how are you differentiating what it is that you do, and how are you essentially dominating or owning your market share in a way, or providing something innovative that allows you to not only grow in this business, but somewhat successfully scale. So there are a few areas to begin to think about as you're redesigning or re-preparing your business, right? So focusing on your core of your business, ensuring that you have a well-defined customer segment. Who exactly are you targeting, right? Because that, again, puts us in the position to understand the market share that we may have and the size of the market that we're attempting to obtain within our business, and who's available. So looking from the supply side and also looking from the consumer side into how you work and interact in this space. When you have that firstly defined, it makes the investor or potential investment vehicle more willing to listen to you, because there's an opportunity that they sense that there's a potential for you to grow. And that's in this space of investment, sometimes if you're thinking about getting it from this potential type of funder, they're curious more so about your growth and sometimes less about profitability. When you're looking at it from the perspective, in which we'll talk about later, of someone who's financing you, so if you're going to get debt, say a loan, this also becomes important because it will show them a process in your business plan as to how you attract these customers, how you retain them, and of course, how you're generating profit or consistent profit from them. So again, market understanding, potential growth in developing these customers, ensuring that you have a good product fit or service. So essentially you've created or designed something that people want. There is some level of desirability, and it's pushing you towards a greater ownership of this market. And of course, a well-defined value proposition. So how you are exchanging value in this particular value chain. Other areas to think about, key and important aspects that oftentimes are missing. You would be surprised. Your management, right? Your team. A lot of times when you're developing or designing or starting off a business, we can start off as solopreneurs, but it's oftentimes good to ensure that you have a team to help with the day-to-day and of course ensure some level of growth within your business. So ensuring that you have a team, right, that has good morale, they're qualified. Right? Having an underqualified team can potentially not only scare investors away, but also potential financiers, right? Going to the bank. If they can't see who's behind this work and the experience and the expertise that they have to lead this, how can they trust that you will actually do what you say you wanted to do with the money and eventually repay them or get them the money they want back? And even from a grant perspective, and we'll talk about this later, if you're seeking grants, as an agribusiness, the team structure, the quality of qualifications that they have to execute and of course manage this grant is also key. So there's a lot of interpersonal skills that they need to have, and ensuring your team has a non-homogeneous skill set. Everyone should have some diverse talent that they're bringing to your team, and someone should be able to think differently to add some additional insights to what you're building. We need to ensure that you have a proven leader on your team, whether that is you or your co-founder or someone you've identified to be a manager. Ensuring that in this there's accountability as well when it comes down to the execution and delivery of your aligned business. When we're thinking about infrastructure, here's another area to bear in mind. So before you tell your story or share your pitch, ensure that your business on the back end has really strong infrastructures. Here's another key area as to why a lot of people at the end of their pitch, or even when they're being probed more deeply with questions, seem to fail, is because there aren't really clear processes, right? There isn't really a lot of replicability when it comes to the way that you manage or run your business. When it comes down to your assessment of capacity, what can you reasonably and feasibly do within your business? Oftentimes, this is missed and skewed, right? And then for those of you, again, looking for investment from an outside investor, a lot of times you lack an exit or growth strategy that you can share. And then we have to think about, again, the importance of resiliency in this, right? Do we have a business that we've designed, we've built, we've tested, we've tried, that shows that we have some level of ability to withstand macroeconomic shocks? And then timing of it all, right? If you're looking to introduce a new product or new service within your particular agribusiness, does it make sense, right? And we're thinking about that from a larger economic perspective. We can think about that from a socioeconomic perspective, and we can think about it just in your general industry and market. Is it oversaturated? Are people already doing this and far too much? Or is it a matter of you actually presenting something that's relatively new and the timing fits perfectly? And most importantly, the last thing in your business, of course, is financials. Financials, financials, financials. If you're asking for money, you better have on the back end a structure for not only securing money on your own, meaning your own level of personal investment, but also you have the structures to manage the money that you'll be receiving, your cash inflows and outflows, right? Ensuring that your business has some level of accounting practices. You'd be surprised how many people get to that pitch and then even get beyond the pitch and get to either an investor or a financier in some capacity, and they ask for the numbers, they ask for previous history, they ask for accounting records and files, and it's nowhere to be found. We don't even have a business bank account, right? So these are the things you have to think about. Are they in place before I even start thinking about how I'm going to tell my story? And then of course, just having a very strong financial checkpoint. As the business owner in your agribusiness, whatever it may be, you have to be responsible for managing your cycles, your sales cycles, understanding your production, how long you're keeping inventory on hand, who potential suppliers are, who you may need to pivot to. Are they more expensive? Are there other ways in which you can manage this chain a little bit better? And then thinking, of course, if you're going, for some of you may be going from farm to table, where do you reside in that process? So again, that may say, I need to check on my finances monthly. I need to check on my finances quarterly, or I'm going to do something semi-annually, meaning every 6 months I'm checking in. But there needs to be a system so you understand, again, those cash inflows and cash outflows and the timing of it all. Okay. Now, let's get into business, right? Let's start talking about this pitch. Before I also break down what exactly a pitch is, here's something you need to do. So after you've taken my initial advice and worked on preparing the infrastructure, you have everything ready to go within your business. You've gone through, you have the team, you understand how this works. Now you have to think about your story. And here's where a lot of entrepreneurs kind of fail. They don't necessarily know their story because we were reminded about the effectiveness of storytelling. Think about the last time you bought something you never thought you would buy, right? Just think about it. How did that person persuade you to get this item? What did they say? What did they do? What did they promise? What did the opportunity promise you? And what actually made you do this? I want you to take a moment and pause and think about that, because there's that level of storytelling that involves our final purchase, right? Or our final use of an item. Why do you pick an iPhone maybe over an Android? And that's, something I share funnily with my students, but think about this. It's all in the way of storytelling. So when you're thinking about developing your business's story, you must realize that it has to have a beginning, a middle, and an end, right? So write that down. When you're thinking about developing your business's story, don't forget this part. It has to have the beginning, the middle, and the end. And when you're tailoring this story to present it as a pitch, here are some key factors you need to pay attention to. So the beginning of your story, right? Setting the tone for the value found in your solution, your product, or your service, right? So this is where you need to engage your audience. What is it that you're going to tell them right here and now that's going to make them want to listen more? This is critical, right? What is your hook? What is your bait? How are you baiting this person into your story? And this may come in various ways. If we're thinking about it from the model of your business, you're starting to talk about maybe the problem that your business is trying to solve, right? Maybe you're talking more so less about the problem, but the opportunity, right? There's an expansive opportunity. There's a new market that has emerged that you now have the opportunity to take advantage of with your particular product. And now you're giving me some data points, right? You're showing me maybe your proof of concept here. Here's what we did. We spent 3.5 months getting insights from this particular farmer, from this and from that. And here's what they told us. And this is why our business works. Exactly. I'm engaging you. I'm giving you data. I'm giving you traction. I'm showing you or providing you with a reason why you should listen further. Now, once you've taken that person from the beginning of your story, you've engaged them, you've hooked them in. Now let's start crafting the middle of our business story, right? So now we're thinking through the details. Okay. And so when you're thinking through these details, now you can get more specific, right? can start talking a little bit about numbers. You can start now talking a little bit about how you deliver this value. You can start talking about the technology that you may be using that's unique, that no one else is doing in your process. You may start to talk about the uniqueness of your customer, whatever it may be, but this is where you get to the nitty gritty, right? Maybe you also talk about your team, how many years of experience you've had doing what you've been doing in your industry, et cetera, et cetera. We're tied in. We've gotten it, we've gotten the core of this. Then at the end, this is where you need to land, right? You're landing this process. You've taken everyone you've hooked them in, you've engaged them, you've given them the details. Now let's land this story. How do we close the conversation? We can think about how many times we've been engaged in a conversation with someone, and the moment, let's say you're on the phone and someone is like, so, I hope you had a great day. I hope that, this is something that we can talk about further, and they leave you kind of wanting more, right? So in that experience, what I'm saying is like, you don't really have a true sound conversation. You don't have a beginning, you don't have a middle or an end, and someone just kind of leaves you wondering, what was that about? Where did we land? What was the point of this conversation that I just had? If you can't remember why you were speaking with someone, or you don't have deliverables or next steps, then quite honestly, then it wasn't as effective as it needed to be. But when you're thinking about your business story, you always need to land. What do you need the audience, whomever you're presenting to, what do you need them to understand, and what do you need them to do next, right? There has to be something actionable when you land. So that comes with sharing the ask, talking through the offer. So if you're saying, this is what I'll give you in exchange for this, this is what I need. And of course, maybe talking through the deal. So again, there are varying pitches that we'll talk about later. So if you're thinking of this being more so of a presentation style, then you might land on hopes that the action they will take next is that they'll visit your website, they'll give you a call, they may go on the website to make a purchase, or they will go and test out more of your features. But if it's an investment, then you're landing on, this is how much I need, this is how we work out this deal, here's your return on investment, all right? So the how of all of this, how do we then go into developing the story? So identify someone on your team who can speak on your behalf, right? Practice and pace. Timing, breath, and pauses. So again, being intentional about the design and the progression of this story that you're building up. You don't want to talk too quickly. You definitely don't want to read from the screen or be dependent too much on wordiness of slides. You want to have something that has a natural flow. You have natural pauses that can cause people to go, they can think on something you just said really quickly, and then you can move forward. Right? You need to have strong visuals, so strong in the sense that no matter where you're pitching, right, you can always make strong or good eye contact with somebody. I can't make eye contact with you right now, but hopefully you can feel me in my presence. But this is also being mindful of cultural context, because there are some people that may not prefer eye contact, but again, making sure that when you're in the room or you're in the space, you are marking yourself, right? So if you are presenting on a stage or a platform and telling this story, you want to be mindful of how you're positioned. You want to be mindful of how you're moving your hands, how you're engaging, and just the overall natural flow. And of course, more importantly, the projection of your voice and your tone. Make sure you're speaking loudly, you're speaking clearly, and you're speaking in a way that people can definitely follow your story. Now, a couple of things to be mindful of in this process when you're thinking about it, right? You're always going to have two sides of the coin in this storytelling. We're hoping, or what I'm hoping after this presentation you will be, is the educated entrepreneur. And then on the other side, you're thinking about the curious investor, right? So here's what's happening on these two kind of depictions that I have for you here. You, as the educated entrepreneur, before you go and pitch, before you tell your business story, you need to do your research. So make sure you're doing your research in the sense on who exactly your audience is, which is really important in effectively communicating your story. So what are their needs, right? And who potentially are their competitors? And what I mean by that is you can tailor your story to fit their needs. You don't want to have a one-size-fits-all story, and you don't want to have a one-size-fits-all type of pitch presentation, because everyone has different needs and different reasons why they're listening to you. And you have to be quick on your feet to be able to pick that up if it's something you don't have time to research. But if you do have time to research, know the investor or the investment team, know the bank, right? Know what type of things they finance, the things they do not finance, okay? When it comes to a grant, understand who they funded before, how they typically fund, what they're aligned with, what's their project scopes, right? Even when going to a family or friend, know what's going to make them possibly get interested and say yes, and speak to that. Do your research. I've had several entrepreneurs go into a space and present the same pitch over and over again, to where the person in the audience loses interest because they're talking about things that aren't relevant to them. Some investors want you to get straight to the numbers, get straight to the meat, right, in your story. So you align your process and your flow in your story to meet just that. And then there are other audience members who want to feel a compelling story. They want you to start off with why this and why that, right? But you have to tailor it to such. Know your business in and out. Understand your market. I've had several friends in the tech startup space, which is a little bit different, go and say, you know, sometimes you get in front of these large pitches and these large audiences of potential investors, and you have to recognize that they don't know your business in and out. There might be some that have expertise because maybe that is their specific industry, but especially if you're introducing something very innovative to a sense, then you have to know how this works. You have to understand the market size. You have to understand the potential to help them to see that, right? Knowing your business. And especially, let's say if you're seeking international investments of some sort, they don't know the context of your country. They don't know how this works. They don't know growth opportunities. Maybe they could have done some research, but they don't know it. So they need you to know that information and be confident enough to share that in your business development, right? Have objective evidence over subjective evidence on the viability and desirability of your business. What do I mean by that? I've had several entrepreneurs that I even train that in their pitches, they list out these beautiful numbers. And I'm always wondering, where did you get that from? What does that even mean in correlation or connection to your business? They can say 90% of Africans don't watch TV, and you're wondering, where did that come from, and why does that speak to the viability of what it is that you're doing? It's unclear. And again, it's very subjective. Or it could be the point where they say, we have so many customers that love us. That's very subjective, right? Have objective data, right? And tie that data and making sure that that evidence speaks to the traction, the work that you've done, feedback that you've gotten, again, further validating your proof of concept, wherever you may be. And then understand the gravity of your ask and the subsequent return. Again, no, this goes back to number one of doing your research. You can't go to one place and say, I need, 75K, I need this, I need that. And it doesn't speak to even what they offer, right? You have to understand how you can fit within maybe their portfolio, what they need and what they expect of you, and speak to that, because you should have opportunities to pitch in different contexts, right? And what that means is that you will say, okay, from this particular place that I'm going to ask for 50K because of this, and this is how I can provide XYZ. From here, I'm going to ask for 75, and this is how this is going to work, and this is how I provide that return. That's what you need to have prepared. Again, it shouldn't be always one size fits all. If they're different, if the backgrounds of the people and companies or institutions you're asking are very different. Now, for the curious investor, these are the things that they're always going to have on their mind. This is the curious audience member. Like, I want to know, how big is your market? What is the potential essentially for high growth, right? What's my return? Plain and simple. What do I get out of this? It's nice that you're feeding me all these numbers. You're telling me about how the industry works. You're telling me about potential for growth here. But then again, what's my return? And then more importantly, do you actually have the team capable of managing the growth of this business? Right? So as you all probably have heard several times in and out when it comes to the concept of investors and investments, especially for those in the idea stage, A lot of times they aren't just investing in what it is that you do, but who you are as the entrepreneur, right? And that's just simply assessing to your qualifications and capabilities of actually doing well in this. And if it's not you per se, you have someone on the team, or you've done the work in a capacity that will, again, mitigate that risk and increase someone's confidence in you. They want to know what you know and what you don't know about this industry. So there will definitely be some gaps, things you're not sure of, but for the majority, they want to know that you're concretely, you understand the angles of this. And this isn't something that, again, has not had some level of proof or validation to it. And then they want to know, are they a good fit for your business? Right? Is this bank a good bank for you? Is this grant a good a good grant for you? Is this a venture capitalist firm or private equity firm, whatever you're looking for? Is it a good fit for you? And are you a good fit for them? So sometimes it's nothing to take personal. Maybe you've done everything right within your story, but there's a misalignment in how they feel they can help you, or seeing how you can actually get benefit from what they offer to help grow your business. All right, so now we're getting to the fun side of things. I'm going to move this over for myself. So when we're thinking about what exactly is a pitch, so some of you are familiar with this, you've heard it tons of times, but here we are just going back over through the general idea of what this is. So a pitch is the presentation of an idea or a business to a potential investor, right? And a pitch is often a timed presentation that seeks to provide a message that influences or encourages an active response from its intended audience. Again, keeping in mind, you're requiring that this pitch will activate someone to do something. It requires effective storytelling, persuasion, and a form of communications that's concise but informative. So what does this mean? Because there is a time component or a time constraint to a pitch and the design of a pitch, you need to make sure that you are sharp, you are straight to the point, because there's a lot of things you can share about your business, but you need to do it in a way that is quick, a way that is effective and impactful, in a way that's still informative about your business. So as I mentioned before, these are the types of pitches that exist, right? And when you're designing your pitch, I put here that you need to orient your pitch with a goal in mind, right? What is the end goal by the time you finish the delivery of this pitch? So we have two primary areas of pitches that are often given. And so one is the presentation pitch. So be mindful to not kind of confuse the presentation pitch with the investment pitch. So from a presentation perspective, this is essentially where you're simply telling an audience, or whomever the audience member is, even if it is an investor, even if it is someone who may become a partner for you, where you're talking about, this is who we are and this is what we do. That's a presentation, right? It will have some of the similar elements of an investment pitch, but the ending is a little bit different. An investment pitch, this incorporates, this is who we are, this is how we will grow, this is how you can help, and this is what you can get in return, okay? So that's the difference between the two. When we're thinking about the sub areas of the types of pitches that we present, we have a few of them, right? So we have the elevator pitch, which some of you are familiar with, or you typically heard when we got into the conversation of pitches. And usually, again, the time constraint around the elevator pitch is about 30 seconds to 1 minute. So again, thinking about, how do I want this message to go? What can I tell this person, if we're thinking about it from the perspective of a character point? What can I tell someone in 2 sentences or 3 sentences about my business? And then what do I want them to do after, once they receive that information? Quick, straight to the point. Then you have what we often are familiar with, which is the competition pitch, right? So this is where sometimes you may have up to 3 to 5 minutes. And this requires you to be concise, but also a little bit more detail oriented than you would in an elevator pitch. And again, still have a call to action by the end, and then show, competitively, how you are succeeding in taking ownership in this particular industry that you're in. Then we have the investor pitch. And this is the one where the time constraint can quite be up to 20 minutes. So sometimes you're presenting in front of an audience of financiers. Sometimes you're presenting in front of an audience of people who run a fund together. It could be anything. But with this one, it does require a little bit more time and nuance into explaining a lot of the financial components of this, but we'll get into that a little bit later. Now, after all of that, you're probably wondering, okay, Jewel, I know how to tell my business story. I understand what exactly a pitch is and what type I'm doing. Now, how do I structure this? So an average pitch, so depending on the time and nature of the audience, can last anywhere to 5 to 20 minutes. And so you should expect on average to spend about 30 seconds to 1 minute and 30 seconds per slide, depending on the number of slides that you have in your deck. You probably should not be spending about 2 minutes on a slide, even if you have 20 minutes, because be mindful that sometimes in that 20-minute component, there's room for question and answer. So you may have realistically 15 minutes. And you have to think about maintaining someone's level of interest in what you're saying. We all have relatively short attention spans, even you all sitting on this webinar right now. But think about that. Try it when you're timing yourself, that as you're speaking, again, your slides or the deck that you're presenting should simply have enough words and visuals that someone can look, but they're making sure that they're listening to you, okay? So whatever's on the slide should only further validate what it is that you're saying. So you shouldn't be reading directly from a slide. You should simply be telling your story, but when they look up, they can see the number. When they look up, they can see the picture. That's all that your slides need to do. When it gets too wordy, you're going to confuse the audience, and they will more than likely, from a train of thought of paying attention, lose where to focus and not be quite sure how to engage with you post-presentation. So that's something to be mindful of as well. So in general, the content that you would include, right, will have essentially your introduction, so your audience address. So this may be you, again, being mindful of this audience and how you begin your story and your introduction. So sometimes you can watch in certain presentations, someone may start with a story or ask a question to the audience. Have you ever spent this much money on a hectare of corn? Well, what if I told you I can reduce that in one simple step? Boom. Then you go into your intro. Hi, my name is blank, and I'm the founder of XYZ Enterprises. And here's how we solve this potential problem, right? That's an introduction that draws the audience in. Then you may state your problem and opportunity. You need to talk through your solution and your value proposition. Then from there, talking a little bit about the value driver, your unique selling point. So these are the ways in which you're doing what you're, the way that you're presenting your business differently, the things that you do uniquely to your business that contribute to the value. So this may be in the form of the technologies that you're using, the processes that you have, or essentially just the systems that you've run and function within your business. Then we get to your business model. You should be talking about how the business functions, right? How does it run? How does this work? Then for some, it's another slide on traction. You know, again, showing evidence of how you've provided room for testing. You've shown growth. You've shown that there is a general interest and desirability about your potential offering. And for some of you, you may be here to talk about impact. How has your business impacted on the larger scale? Some of you may have a demo, so you may include your demo in this particular pitch presentation. And a demo is simply a demonstration of your product or service. Then your go-to-market, how you obtain or how you intend to obtain a customer strategy, or generally your market strategy, how you intend to penetrate the market or what's happening currently in the market that you exist. Then we talk about the competitive analysis. You need to know what's happening in industry, of course, with companies or businesses, agribusinesses similar to yours that may have the lead at the moment, or those that essentially maybe operate in the same capacity as you do. Management team, again, speaking to the experience of those that are on your team. Then more importantly, your financial projections, right? So the relevant ratios, your asks, your return on investment, cash flow, your burn rates, all of these things are important features here. Then, of course, talking through your market size. So the size of your market. So thinking about your total addressable market, what you're actually obtaining within this market and how you intend to do that. And then I put an asterisk here for evaluation because that's dependent upon, again, your audience in which you're tailoring this pitch towards. So this is important because it is flexible, because it moves around based upon who exactly you're talking to, and what they need to know. So some things they may not need to know depending on who this is tailored to. But this is the general outline of the content that you should be developing and then using to help you to craft your story. Now, I borrowed this for an amazing Make It foundation here in Africa, whereby they presented the thoughts or the processes around where you are in your business cycle, and then how that kind of relays to essentially the funding that you typically go after. So this is where we're talking about when you're in idea stage, or when you're, that's where you're still in ideation or kind of building, right? And so for here, you might then be looking at potential investors from the, or financing from the standpoint of angel investors or different networks. You may be getting this from incubators, you may be going to grant fund making foundations, you may be talking to friends and family. As you're progressing in the idea stage and you're starting to build, now you may start looking for possible opportunities to begin talking to accelerators or angel investor networks, or using crowdfunding platforms, and still kind of producing grants from some of the more government-owned type of grants that are available to you. Now, when you get into market entry, right? Now, so now you already have a particular prototype that you are now putting into the market. So this could also very well expand into an MVP, whereby you also have somewhat of a proof of concept. So this is something that, again, you've gotten through an iteration process within your business, and now you're in a position where you can start to talk a little bit more to some impact investors. You might now get some seed stage capital from some venture capital firms. You might then have the opportunity to talk to more cooperates in this capacity. And then lastly, when you're at the growth stage, now you have entered the market successfully and you're looking to kind of expand your reach within your market. And now you can talk more to venture capital firms, private equity firms. You're in a position now to talk to banks, possible impact investors, and you can still reach out, of course, to some larger foundations to secure funding for yourself. It's important that you recognize the stage that you are in so that you know exactly who you're talking to. That's going to be important, because you can't be an idea stage and think that you're going to pitch to a VC firm. It's just not going to work. You don't have the things in place to show evidence of how you would mitigate risk for them and give them that return. Other things to be mindful of is thinking about what type of capital you're actually seeking, right? So you got to know the name of the game, the name of the finance game, where you are, so you know the exact stage that you're in, you know the work that you've done in this space, and you know exactly the type of capital you need to move forward. So thinking through that, so it may be seed capital that you're interested in. Again, this comes into the way you convey your pitch, the money you need to do your initial research and planning. You may be seeking for startup capital, right? And this is the funding that will help you pay for particular equipment, rent, supplies, possibly in your first year to operation. I always put a note here that when you're asking for startup capital, don't just make the assumption that you can go there and say, oh, I didn't put anything into this business. This is where your stories around traction and development are really important, because on average, most people are expecting that you've put at least 15 to 25% of your own money, your own investment, your own resources into this business before you even go and ask for startup capital. If you haven't done that, then you're not in a position to ask. Or there's a greater likelihood that someone will not, more than likely not be serious enough to, or take you serious enough to provide funding in your own business, right? Then we think about mezzanine capital. So this is some form of a hybrid form of capital that leads towards expansion to help your company grow. And then there's the concept of bridge capital as well. So it bridges that gap between your current financing and your next level of financing. And that's a little, most times for a lot of growth venture companies. Now, when we're talking about how we do this pitch and what we're considering, here's what I want you to think of. When we get into the conversation of seeking some level of loan financing, here's what you need to know. When you are presenting your story for loan financing, you have to understand that at this point, you're seeking either short-term or some form of long-term debt. And this is going to require you to pay this back with some interest. And you may also need to have some level of collateral. When it's here in Ghana with this type of thing, you may have to have some level of immovable collateral, which means it's a house, right? You have to have an office or a warehouse. We don't typically recommend, oftentimes when you're thinking about this pitch, for smaller SMEs to begin asking for this because it does require a lot of evidence of you actually progressing substantially. And of course, you having the ability to pay back this debt, even with the interest added on. So when you think about that, have a payback plan and incorporate that into your financial projections. You must have some level of revenue generation. So I'm saying all this because this comes into your story and how you effectively communicate that you have these things. And then you're mindful of potential one-to-one. And what I mean is that sometimes when you're going into these places asking for this, you may be asking for 250,000 of whatever your currency may be, but they're expecting that you've already either generated this amount of revenue in your business, the 250 you're asking for, or you have someone already willing to give you that on the back end, or you've invested this yourself into your business and you're seeking an additional amount of loan to move forward, right? So again, these are the things you take in mind. Now, when positioning your story to effectively ask for this or pitch this, you make sure that, again, looking about the list that we had or the structure of that you do have a good focus, or your entry point of discussion is around your finances, showing that you are cash or can be cash positive. You have a strong discussion around the emphasis of your team and of course the market. And you have an ability to show some of the current assets that you have available. And there's a level of viability to your ask, right? So that's all going back to that repayment capacity, right? Can this person repay? Do they have the capacity to actually execute this loan once they get it? Can they pay it back monthly? Have they shown that in their projections to us? Essentially, for some of you, you may have a request of credit worthiness. Have you been on paying back smaller loans, right? Just general loans. Can you show evidence of that? That may be in your pitch or your presentation. When we talk about equity financing, right, this is when you're talking to potential investors who may invest a sum of money into your business or a potential share in your business. Most times in this type of equity investment or financing, they do expect anywhere from a 10 to 30% return. The good thing about this is sometimes this can be viewed as some capacity of patience capital. I start you off here because I want you to understand what goes into this so you can build your story around what they may need or what they expect to hear. So in this one, you need to make sure that you have extremely strong financial models and a strong and well thought out written business plan. The reason being is because this is one of the more riskier ends for a potential investor. It's a high risk on their return, making that investment, even if they have ownership in your shares, because if in your company, because if your business fails, at the end of the day, they lose what they've invested, right? So that's something to be mindful of. So when you're presenting this particular pitch, you need to have a strong emphasis on your financial models, your market size, your potential for growth, an emphasis on your team, again, showing them some level of traction, how you've been able to make this happen. And of course, for some of them, the valuation process or valuation of your business and your intention or plans for exit, along with, of course, the general starting conversations around opportunity and who you are as a business owner, etc. Grant financing. So this is where you're not necessarily obligated to pay back your funding, but it may come with a lot of restrictions in how your capital is used and may require some extensive tracking depending on who the grant provider is. So in this one, for your business, depending on where you are, and if you're seeking this grant financing, you need to make sure on the back end, you have business activities that are aligned with the scope of the grant. So in order for you to effectively or get ready to position your pitch to speak to this potential grantor, you need to make sure, again, you're aligned with what they expect their outputs to be by the end of the grant period. And with that, they'll be paying a lot of attention to the following. So again, making sure your pitch is extremely inclusive of the following areas, which is team management. So who's on the team, who's going to be responsible for helping to manage and execute the grant on your team and track it over time. Level of impact, I put an asterisk here for those of you that may have some level of a social enterprise or social enterprise agribusiness. You have to track that impact as well when it comes to your grant financing. The current partners that you may have, right? That makes you more viable to a grantor because it means that you have connections and the likelihood of you growing or moving this impact forward is greater. Your value delivery, right? How you get your value across. and the level of traction. And of course, being able to communicate effectively your long-term strategy. What happens after the grant period ends? How can they ensure that by financing you with this grant, you will go on to succeed further? That's what they need to know. And that's how you need to modify your story and your pitch. When you're thinking about obtaining a strategic partnership, then of course, this is you trying to find an alignment that enables you to position or attract new markets or opportunities. So typically you're seeking someone who can align with you or work with you in a way that now with their partnership, you can grow to a point where you're entering new markets or you're able to expand to connect with new opportunities. So this requires you to make sure that you have a well-developed business plan. So even if you're more so in the kind of market entry phase and growth stage, you'll start to have this defined business plan. And then you need to make sure that you have relevant contracts in place. So again, that goes back to that infrastructural needs of your business because no strategic partner is going to want to come in place if you have to figure out how the contracts are going to work or who's going to do what. You need to have some system available and ready and management structures, right, that can show how things are divided evenly across the roles of the partners. So whether this strategic partnership involves some level of management integration or certain deliverables, all of that needs to be outlined and prepared when you're getting ready to present to them. So in this particular pitch, or the story of your business, you are essentially conveying your value proposition, talking through your financial projections with them, discussing the potential market opportunities, of course, why they want to be involved or align with you, and again, talking a bit more about your team management and structure. Then if you're seeking some level of technical support, right? So this is essentially you saying, I'm not ready for financing in any way or partner per se, but I actually just need assistance with various operational areas of my business, which may include marketing, customer acquisition, financial modeling, whatever that may be. And this may be for those of you that are seeking to enter into an incubator or maybe just simply get some mentorship from a large mentoring network or company or anything of that nature. And so with this one, you need to be mindful of having your proof of concept ready. You've done some testing and validation. You have somewhat of a lean business plan available. And sometimes you can just simply utilize a business model canvas, right? And have that clearly aligned so that someone can see where you have tested and how you've proven to validate what it is that you've developed within your agribusiness. And of course, have somewhat of a team. So even if it's just you, maybe looking or seeking to have a co-founder in some capacity, or a co-partner, or a partner, or someone who's managing some of your operations, right? And with that, you should be able to convey in your pitch just your value proposition, vision for growth, traction, testing, validation, and of course, how your product, your service, or technology within this space actually works so that they can see how they can provide that technical support. So lots have been said. I hope you've been taking notes and you're ready to ask questions. So in closing with all of this, when you're trying to effectively communicate and persuade someone, right, we're talking about the story of your business, having the beginning, the middle, and the end, where you want to land, having this goal in mind. So understanding your business, and how you can grow. Where are you trying to grow through? What do you actually need realistically? And again, using objective data and evidence to back this information. Then, of course, knowing your audience, right, and tailoring your pitch to this audience. Do not have a one-size-fits-all conversation, because obviously as young people, when you're going to ask your mom for something, or you're going to ask your dad, or even if you're married, you're going to ask your spouse for something, compared to even asking your child to do something, we all have different ways in which we speak to them to get what we need or need done, right? So make sure it's tailored and fits to the specific need and speaks to a benefit that they may see that there's a return on this opportunity. And practice your presentation, okay? That's another area where a lot of people miss out on, is that they don't practice, or they don't take time to practice and get feedback, because that's the only way that we can understand how we can improve. So there are different opportunities, some of them even across Africa, where you can go into spaces. I think there's one, Toastmakers or something of that sort. We can practice your pitch and, get into the capacity of public speaking. And even if maybe you're not the best public speaker, try to identify someone on your team who can do it for you. And then get in the practice of following up. Don't just leave any pitch presentation or opportunity behind, where when it's done, it's done. Be in a position where you can at least leave for the day with someone's contact that you can touch base with, because maybe in that moment they may tell you no, but there may be an opportunity for you to come back and get that yes if you maintain that relationship. And of course, you continue feeding to them the story in regards to what you want to share. And so I'll close with a story of a friend of mine in the States, whereby in their pitching, they were starting, it's not agribusiness related, but they were actually starting a co-working space. And mind you, in the United States, that grew fairly popular when you have spaces like WeWork that were coming up and showing that this model can work. Now they had a different pitch or value proposition, is that, you know, they wanted to build a community out of this and not just have it as a co-working space where people come and go, but they wanted to create something where people can come and engage. And the idea behind it was that the cost of this was going to be about $3 million US. And the vision was great. They were both, you know, grad students. One was a former lawyer and from law school, one was in business school. So they had the mindset, they had the capacity to develop this. And so they had all those checkpoints. But what happened is that they ended up getting told no 20 times. So imagine receiving 20 rejections. So in that, they kept following up. They continued to kind of refine their pitch, and they would talk to people. Now, mind you, there are some investors that may not want to be talked to, so be mindful of their rules, but maybe you can get one person you can maintain contact with. But they continued talking and recognized that there was something that one investor wanted, and that was a little bit of to mitigate their risk that there would be somebody else on board with this, that they wouldn't have to be the first one. They wouldn't have to make the first move. So they recognized that in the design of their vision, they went and talked to one of the top architectural firms in Atlanta to help them execute this. And so when they backed the vision, saying that this is something we foresee being great and can grow, and they got them on board, then they were able to go back to this potential venture that's investor that said, come back to me with something where I can show someone else has skin in the game. And they were able to get their first investment. And because that firm invested in them, it opened the eyes for other firms who were like, oh, wow, so they're backing you too. And they started to get more and more funding and ended up raising their $3 million plus to start their businesses. But again, that didn't come with several no's, but it was without several no's, but it had a lot of strategy behind it. They had ways in which they knew what they needed to do to effectively sell this story, because it was going to be different. So be mindful of this story that you're telling, be mindful of your audience, and be mindful of the vision for where you want to grow your business, in particular when it comes to the agricultural sector. And of course, being mindful of the changes within the agri sector as well. So I thank you all for your time. We have reached our hour. So I want to say thank you. And hopefully if you're interested in connecting with me, you want just to chat or anything of that nature, here's my email address. Feel free to connect. Thank you.
Thank you so much, Joel. This was pretty enlightening. We're just pretty much scanning through the comments that came in as you were presenting. And I mean, you can go through them yourself after the seminar, but it's people are really impacted by this presentation. And there are a lot of questions that I'm going to direct at you from them. So we have Kabiru Kaimami from Nigeria, and he's asking, as an idea stage agripreneur, is it important to feature in the financial aspects about my idea stage business to an investor? Or what's the importance of including the financial projections or history to a prospective investor?
Yes. So
Kabir from Nigeria.
Thank you, Kabir from Nigeria. So even at the idea stage of this, right, you recognize that there are costs to your idea, and that requires some level of research, right? So maybe you can't quite obtain those things financially right now, but you have to do the research and understand how much it costs you to build this business, even how much it will cost you obtain one customer when you're trying to kind of grow this business, and then thinking about, you know, if you have certain needs for your inventory, right? How much it takes for you to get the level of inventory you need. So being strategic about the suppliers that you work with or potential partners that you may have in securing the level of inventory for seedlings or whatever it may be in your space. And that needs to be presented, because it shows again that you've done the research and the work. And then now when you have even just that pro forma perspective, right, of numbers, you can now take that and then make projections around what the market is charging for something. And if your value proposition is around pricing, then maybe you're coming in a little bit lower. Now you have the right numbers to say, this is how much it costs me, but I could potentially reach this supplier who'll give it to me for less. Thus, I can make my price point lesser than the market. And that right there, when you show that projection of like, but when I obtain this number of customers, right, this is where I have the opportunity to grow. If an investor can see that at the idea stage and understand your logic or reasoning for why you are positioning yourself a certain way, the numbers are the only ones that are really going to tell that and make it real for them, even if you haven't acted on it just yet. So I do say, even in the idea stage, take that time during your testing and validation to begin to think about how much all of this is going to cost you, and then also think about your positioning in the market so that you can project that and share that with a potential investor.
Fantastic. Another question from John Sakuaha. He's a radiography technologist from Zambia, and he's asking that I stammer, and don't you think a minute might be too little to tell my story if I was making an elevator pitch?
That's a good one. And I snickered because I've had students and also people that I've worked with that's had that same issue. And that's where practicing comes into play. Know kind of where your points, how you can pace yourself, right? You have to practice, because we all have sometimes all of us have a little bit of a speech impediment. I had to learn how not to have like filler words. I have the tendency to go, when I'm talking, and that takes up 2.5 seconds of my time. So a lot of times, depending on who your audience is, you can even inform them in a joking manner or in a lighthearted manner that, hey, this is an impediment of mine. Therefore, you know, bear with me as I work through presenting this to you today, right? You can state that at the beginning so people are aware of what's happening. You can take time to practice on the back end so that you know your cues. You can kind of hear yourself in your delivery and your method of delivery. And then when it comes to that 1 minute that you have, maybe try to say, okay, I'm going to try my best to deliver this content in 1 minute and 30 seconds. Because honestly, again, you don't want to spend too much time berating a thought, because you're going to lose people's attention. And that's what you want to try to avoid as best as possible. So it's a matter of you figuring out, how do I work this presentation to fit my current impediment so that I can tell my story and say, maybe it's one sentence that I say or two sentences that I say that gets this point across easily. I have the picture to match, I have the data to match in the background. People can see this and we're good to go. So that's what I want you to think about. So yes, the time is still important. It's a little arbitrary in a way, but I want you to be more intentional about conveying your message effectively than thinking about the time constraint that I've provided.
Right, great. So that's pretty much a follow-up question on Kabir's submission. It's from Adnan Lamte, Ghana. And he's asking that okay, so the question is, how exactly do we present financial figures? Or how exactly do we capture financial figures in a pitch?
Good. So a lot of times when you're trying to capture financials, you can typically use a table format if you would like. So you can have tables, you can have bar charts, any type of instrument typically that you can find in Excel. So using that, you just need to have clearly outlined axes in a sense, right? So if we're talking about, these are my costs, these are my selling and administrative costs, these are my expenditures, this is my revenue, you would have that lined up in one aspect of your table with the numbers to match. You can show them up to a potential financial period, right? So whether you're showing them what something looks like over the quarter, what something looks like annually, you would have that aligned on your table. Then you can use graphic visualization to help show your data or your financials more concretely. So maybe you're using this financial to compare what something would look like in 1 year compared to the next year, compared to the next year. And that's kind of how you use those figures to help, convey your message about your finances in a presentation.
All right. So there's a question from Ibrahim, hasn't indicated country. He's saying that the major problem of most agripreneurs or other businesses is not the lack of capital, but pretty much in the idea. Because I have seen many agripreneurs, entrepreneurs with capital whose businesses don't succeed. Is there a possible connection in terms of, is there a question of ambition, a question of an ability to pitch for extra capital or technical support or some form of partnership that gets their businesses going? What do you think is the reason why you might have capital and still not succeed? Is it connected to any form of pitch?
Yeah, that's a great question, Ibrahim, and I love it. This is something that we talk about in our entrepreneurial course, and there's a lot of research on this. There's a particular area of research, I think it's Shane and Kavasky or something, I can't remember the name right now, but they talk about kind of the success or the likelihood of success of an entrepreneur or a venture, which is based off of this nexus. And what this is a nexus between the entrepreneur and then the venture themselves, and that kind of fusing fairly well. So if you have an entrepreneur that doesn't necessarily have the skill set, the expertise, or capacity to grow or develop this business, even if they have a phenomenal idea or an opportunity, it won't necessarily succeed. And then you may have a great entrepreneur, right? They can speak, they can get out there and raise capital, but the venture or the idea itself is fairly poor. And then of course you won't see growth or you won't see success. So to answer your question, yes, sometimes it's not about capital, because you have a lot of failures coming from the United States as well, where they've gotten capital, they've raised the funding, but the idea wasn't strong enough, right? They were able to sell that story. And that's why I say it's important that if you have the ability to tell your story in a way that's extremely effective and persuasive, you can sell anything to anyone, right? But when it comes down to the psychology of it all, right, when we're thinking about these ideas, a lot of times what I've seen in our entrepreneurs is the fact that we are not thinking about growth. We're not thinking about the expansion, right? Sometimes we don't have a vision to expand, and thus, we can't essentially take this capital and use it in a way that speaks to us being able to expand beyond our current markets. So the idea might be okay, but the vision around the idea and the growth strategies around that are not in place. So there's no way that this venture can actually grow, or it's not even a scalable venture. And to that point, again, we have to start thinking about what can I do with what I know and use that for what I can do in the future. And that's where kind of the source of innovation needs to come from, or a shift here on the continent about how we culturally innovate, right, amongst our current practices. What are we building for? How are we building these businesses? And then what are the support mechanisms that need to be in place beyond funding? It's not just always about money that will help this business to sustain, that will also help this business essentially to venture into other markets as well.
All right. We have Midamba from Kenya, and he's asking, is there any advantage or is there an advantage that growth stage agribusinesses have over idea stage businesses in a pitch?
Oh yeah, the advantage is just simply traction and time, right? So a growth stage company means that they have customers, they have a pipeline of customers, they have funding, They're making money, they're generating some level of profit, wherever that may be at a point. And they've positioned themselves where if they get this capital, right, or this amount of capital, they are going to be in a position where they can now even get a larger share of this market. However, with the idea stage venture, they haven't tested. You haven't confirmed completely that, maybe more than 10 people want your product. You haven't put it or brought it to commercial, where it means now you're competing against other similar ideas or products in the market, and you're seeing how you're faring, right? So without that, you just have this idea that you hope that after some testing and validating that there is a market for it, people are interested in it. Now you can add the next leg of elements that need to be in place, maybe developing that MVP or prototype that you can put into the market. People can start paying for it and can see how it does and constantly adjust and iterate until you get that product that, again, within its business cycle can enter into the growth stage, because now you've crossed over to a point where people are interested in buying your product, and there's a larger majority of people that are interested in buying your product or service.
Right. There's a question from Ara Pharmacy. Dairo from Nigeria. I would like to ask about startup capital. The 15 to 20% personal input, which you spoke about, should it be in assets or as cash?
It can be a mixture of both, right? So you need to show how you quantify essentially your what we call sweat equity into a sense, right? So I would say more cash investment into your business sometimes is more favorable, but if you've managed to obtain certain assets within your business or proof of that, that also represents some level of collateral for a potential investor or financing instrument, that is feasible enough. But they definitely just want to be able to see that you've made some level of investment into your business, and you're not just asking for something whereby you haven't had the capacity on your own to what we call bootstrap. And that also speaks to the likelihood of you actually even sticking with this idea to begin with.
Right. So we have Josiah, has indicated a country. He's asking, is there any possibility for an agribusiness in its idea stage to secure equity investments?
That would be a little bit challenging, because when it comes down to equity investment, obviously you have to be in the position where you have the infrastructure in your business whereby you can offer or potentially the capacity to sell shares, right? So it means that beyond the idea stage, granted, you can tell maybe, how do I say that? You can tell a family friend or someone like, oh, I'll give you this level of equity in my business if you give me this amount of money to start up, this amount of seed capital to do this XYZ, and you would own this, and you might have a vesting period with them, whatever that may be. But if you're going into somewhat of an angel investor, going into a larger network where there are more things at stake, being in the idea phase may be a little bit difficult to get that venture, because there's some areas within your business that you need, or milestones within your business and benchmarks you have to hit to reduce the risk on their end for even choosing to take equity over your business. So I've even had people, when we were starting an app before even we were coming out of idea, and we went to an investor who was interested of getting equity as a part of his offering to us, but he said, come back to me when you've actually have users on your platform, right? So it varies, but it's a little bit more challenging depending on your benchmarks you hit.
Right. This is an interesting question from Titus. He's asking, how do I pitch around the risk of the weather conditions or climate change in an elevator or any other kind of pitch? These are questions that most investors usually pose.
Right. So that, again, goes back to my fallback response on research and understanding the positioning of, or the effects of climate change, right? So the truth of the matter is because this is kind of something that is something that's uncontrollable for us. We see the potential of what's happening, and you as a person within this industry need to keep up with the data that's coming out consistently about the changes and the effects of climate change, especially on areas that maybe once were more tropical, that maybe start to become a little bit more arid to some point. And then you need to show the confidence of how your service or your offering is prepared to resolve or respond to such changes that may approach or impact the delivery of your business. So again, it sometimes can be hypothetical, but again, it's the logic and reasoning behind the research that you've done to understand the progression and the changes and how your business is currently structuring itself from a resilience perspective to prepare for minor shifts when impacted by climate change.
All right, there's a very interesting and specific question on, I think this is Danladi from Nigeria again. What percentage of a grant would you advise one uses for fixed assets and for operational costs?
Good question. So the thing about that is it depends on the grant. It doesn't solely oftentimes depend on you. So when it comes to the grant delivering agency, if it's more of like an international grant, they have stipulations into what you can use and into how you use your funds, right? So this may be in response to the fact that if you are like, let's say, a social enterprise, there's some aspects of impact that you're required to make, and therefore there's some parts of that grant or that funding that have to go specifically to that particular or expected output. It can't go to operations, right? However, if let's say you're applying for a particular grant and designing or developing your budget, when it comes down to operations, you have to think about, it's not a matter of me telling you which one is better or which one is worse than the other. You have to think about, what are you trying to do with this funding? Is it better vested in your interest to actually design your budget in a way that speaks to payments within operations, so payment of staff or movement of businesses and paying for this and that and third? Does that make sense? Does that grow your business specifically, meaning that you can take care of human capital, etc.? Or does it make sense to have funding that goes more so into a fixed component that supports the growth of your business? So when you're developing your your budget for a grant, that's what I would want you to think about is, how would this money be better suited for your intention for growth? And if you're applying for a grant that already has particular structures in place, then you just have to be mindful of what their expectations are and how you use this funding, because some of them may limit your capacity on it going towards certain operational causes, and it needs to focus directly on your expected output.
All right, there is Gideon from Ethiopia, and he's asking that we are at our first year of investments and our balance sheet only shows expenses. Mm-hmm. We are beyond the idea stage, but not yet at growth. Mm-hmm. How do we present our case, or what's your perspective of our situation?
Mm-hmm. Interesting. So it will probably also go a little bit beyond your balance sheet. I'd want to see a lot more of your other financials. So looking through at your cash flows statements as well to understand just kind of general inflows and outflows of cash. Also kind of paying attention to a few different varying ratios, right? Because there can be a positive possibility that maybe you are oftentimes in the negative, but there's a reason why when it comes to your fiscal year. So again, it's the reasoning behind why this is happening to you. So if you have a venture that is capital intensive, and thus you've had to pay for a lot of things, you've had to expend a lot of funding to get to producing a prototype, or get to producing an MVP, or get your product simply on enough shelves to meet certain demands, this is the way you can explain the narrative, right? If your numbers or your figures aren't exactly favorable, but you also have to show history, or show evidence, of what can happen. So you would counter that, right? It's presentation with what can happen once this level of investment enters into your financial figuring. So you would have to present two ways. So one, tell the story behind what happened, the reasoning and the logic as to why you were in the red, and then pivot that to make sure you show a counter financial statement of what happens with the expected investment or funding, so that people can have some level of confidence that if they give you this, we see the potential there for growth and your capacity if it's a matter of you paying something back or whatnot, and that you also can show as well that you do have the demand and you do have the customer, the market for this. So if all of those signs are cleared financially, your financial story on the back end, you can have stronger evidence to show why and how you're going to improve. So, yeah.
Right. And just before I continue with the questions, I would just like to address all our privileged viewers and audience that questions that have been specifically been addressed to AgroMinds Africa, we would have a session with you during the week, and that's ideally next week, and we'll take specific questions related to the challenge. And so let's focus our questions with respect to today's presentation. All right. So there's a question from Origwe from Nigeria. He's asking, what type of financing is best suitable for an idea stage agribusiness?
So when you're in the idea stage, what's typically best is if you could potentially find grants, right? Because you don't have to pay those back. There are a lot of grantors or incubators, different funds that are available for those in the idea stage, and specifically speak to that you can get. We go down to family and friends, right? And even if you don't have that network, trying to develop, this is from a strategic side of you developing a network by being present, right? So going out there and talking to people, presenting your idea with context over and over again, to where you can be present at networking events. People hear you, they know what you're doing, you're presenting constantly. They can see that there's potential for you to grow, and that can be your network if you don't have the family and friends who have the funding for you. And then a lot of it also comes from your own investment into yourself. The reason why I wouldn't say go after a loan is because your capacity to pay back that loan will not happen at the idea stage unless you have had someone give you a large sum of money and helped you to operationalize this. When it comes to equity, again, from an angel investor or anything of that nature, a lot of times the stage you are in your business, depending on you and your relationship with this person, it comes with some challenges, so it's very difficult to do. But if you stick probably, again, within that area of your cycle to just grants, your own funding, family and friends, or your own developed network and partnerships there, things you don't have to necessarily pay back, that's the better place to stay in when you're in the ideas phase.
All right. I would kindly beseech Ragai of Kenya to rephrase his question so I can communicate that. Okay, so we have Hamza from Nigeria asking, is there a room for working capital in one's pitch? And if there is, under which particular pitch context would I have to include working capital financials?
That's a good one. So yes, there's room for that. When it comes to you discussing your financials in your conversation to an investor or financier, you can talk about that towards the onset or the beginning of your conversation as you dive into your financial presentation. The reason being is that it gives an idea of what, sorry you guys, I'm getting over a cold. It gives an idea or insight into kind of just the current conditions of your financing within your business. So you would want to present that relatively early on before you begin to talk about additional context when it comes to projections or your ask or other ratios that you may be presenting to.
All right. I just want to address a question from Kwesi, Ghana. What kind of capital will we be pitching for in this competition? Kwesi, my answer to you is you guys will be pitching specifically for equity financing. All right. There's a question, okay, from Kwesi again, and he's asking, do you recommend that in seeking some startup capital for an agribusiness, the focus should be on equity and grant financing? Okay, I think we've already, or you want to still go over that for him?
So ask the question once more.
Okay, yeah, so he's asking, in seeking some startup capital for an agribusiness, should the focus be only on equity and grant financing? I was actually hinting at the question has been asked already, but you could still readdress it.
No problem. So again, you have to be mindful of where you are in the cycle of your business, right? So if you're pitching for an agribusiness and you are in the idea phase, again, you know where your ask should be, and it should probably be around grants more so than anything. However, if you're more so in a market phase of your business or a market entry market phase of your business, or you're in the growth stage, right? Then that's when it's a little bit open for you to consider equity and also consider debt, which can come in the form of a loan or a convertible note of some sort. So again, it depends. You have to pay attention to where you are in your business cycle, and be mindful again when it comes to your current finances. It all matters about how much you can actually take on, pay back, and your preparations for growth. Because again, when you're thinking about equity, there is an expectation of some level of exit, right? And some may expect to exit within 5 years, some less, some 10 years if they're really invested in you in some capacity. So you need to be able to hit particular benchmarks financially in your business to ensure that these returns are made. So that's what you have to think about a lot of times. And of course, there are different ways in which you can discuss the equity and equity financing. It depends on the grantor of that or the investment angle of that. But they do have terms in which you must meet. And if you can't meet them, then it can be posed as a challenge. So, yeah.
Right. So Radai from Kenya just go back to us, and his question is, when a company has more than one investor, or sorry, when an agribusiness or a venture has more than one investor ready to put in money into their business, what advice do you have for such a situation?
1 second. Wait, ask me one more time, please.
Asking that if you have more than one investor interested in investing in your business, what will be your advice in dealing with that situation? I guess he's trying to ask how you're going to deal or assess, or what assessment metrics would you have to put in place to make a decision between multiple investors that are interested.
Oh, okay. Interested in your business, right? Okay, yeah. You just have to make sure the terms are agreeable to you, right? And what that is simply saying is that you're thinking about the length of time, right? How long do they intend to exit? You're thinking about the percentage, right? What do they want by the end of this? You're thinking about their general offer, the amount of equity they are seeking or you're giving in this process, and then their level of investment in your company. So think about that. So some of them may want to have, for a certain amount of equity, they want to have a lot of managerial control over your business. Are you willing to give that up? Is that okay with you? And then there are others who don't want as much as a hands-on managerial connection to your business. So those are varying things. So you're measuring against time, you're measuring against the percentage of the ask, you're measuring against the amount of the share that you're giving to them compared to how much they're actually investing into your business. You're measuring against the level of control that they want when it comes with the share offering that you're providing with them too, when you're looking at that. And then you will also probably look at their portfolio. What other businesses have they invested in and how have they fared since exiting their portfolio? Have, in working with this particular investor, have you found that these companies have grown because the investment team themselves are knowledgeable about this space and have managed to help your business scale up in a capacity? Because that's also important. You're looking at their team too, and that fit. So those are things that you start to look at when you're comparing them, just who has the better terms for you and who can really help your company grow based upon what you're willing to give them in the short term and for the long term.
All right, so we also having questions trickling into our WhatsApp, through our WhatsApp number. So I'm going to read a couple of questions. I think for those who find it inconvenient to type their questions in the YouTube chat platform.
No.
And so there's a question from Joseph in Nigeria. He's asking for an elevator pitch, and I'm sure it's within the context of the recent challenge that we actually launched. Mm-hmm. How would I present my business plan or summarize my business plan in a verbal pitch as the elevator challenge?
Okay, so again, it's based upon timing. So I guess to that question, Stephen, how much time did they have for that?
They have a minute. They have up to a minute. Yeah.
Up to a minute, perfect. So again, you have 1 minute to convey this message. So you want to talk about the solution. So what it is that you're offering. Hi, my name is blank, or I'm going to use Stephen. Hello, my name is Stephen, and I am the founder of blank, blank, blank. We do blank. So you automatically state what it is that you do. Then you state the value in the way that you add, or how you add value into this. You state essentially this market size. It has the potential to serve over 103 million customers, whatever that may be. You then may talk a little bit about if you've had some traction, right? You could talk to that. You could say, in the past 3 years, or 3 months, we've been able to do blank, blank, blank. And we intend to do blank, blank, blank in the future. And then you will then land, right? So what do you want agribusiness to understand about your venture? So pulling from that, you may then include to say, we are in a position right now to seek an additional level of technical assistance, which we assure will help us to blank do X within the next 3 months, the end, right? So you take, again, you give your offering, you give your value, you give the market size, you show traction or evidence of traction or potential growth, and then you land and you also talk about your team. So excuse me for that. You'll talk a little bit about who's on the team, and then you will close essentially with how you want to land. What is your ask of this? What do you want them to know as well? So that's how you can do it. Because 1 minute, it seems short, but it's actually fairly long. I used to do this with my training cohort, and you'd be surprised how much information you can get out in 1 minute, but you have to be concise with what you're pulling out. And ideally, you just want to show how you deliver value in the most effective way and the evidence of that in your 1 minute.
Fantastic. And I want to just add this follow-up question and then answer to it, since it's directly within the context of the elevator pitch challenge. This is Musanvu from Zambia. He's asking, with the challenge closing this Sunday, challenge actually closes not on Sunday, it closes on Monday, Sunday. Is it possible to collect more than one prize? So basically what we're doing with this challenge is that you are supposed to, as we've already intimated, within a minute, present an idea, or basically what you're up to in your agribusiness and how you think your specific agribusiness can utilize the funding available to create impact and generate wealth. And so you would want to make sure that your pitch pretty much specifies how much you need and how much that amount, if you win it, could impact your business. So those connecting dots are very key in your pitch. Identifying exactly how much you need and connecting that to the impact that that could create in your business. So if you are, for example, in primary production and you want to purchase maybe a harvesting tool, you need to indicate that this is what we've been doing. We are pitching to secure maybe $2,000 to purchase so and so equipment. And we believe that this particular equipment, when procured, would be able to drive our growth either financially or employment-wise, or in any other metric that you feel it is connected to. So make sure that your pitch indicates specifically how the amount that you need will transform your agribusiness, which is why we are actually putting up to $6,000 for that purpose. So this is purely venture financing for specific projects in your business that need push-ups. All right, so I'm going to go to Danjuma again from Nigeria, and he's asking that. No, let me switch to Olumiwa. Yes, is it possible for an agribusiness in idea stage with little capital and equity, but without a proper business account detail or without proper business account details, to secure fund from an investor? So this is you, Joe.
Okay, so you're saying that you don't have. So repeat that to me, Stephen. So I want to know what they don't have first.
Yeah, so he doesn't have, or they don't have a business account, or what he calls a proper business account detail, but he does have capital and equity that he might have invested into his business himself. He's asking whether it is necessary to have a business account before thinking of pitching to an investor.
It's important. Yes, it is important. When it comes to starting your business, if you have a business account, it shows some level of transparency in your financial dealings, right? Because in doing business, even as solopreneurs, we have to separate our personal financing from our business finances. So the only way that you can do that is to have some clear kind of indication that this is my personal money, it doesn't mix with my business money, and this is the money that I make for my business or I make expenditures for my business from. The moment you mix that, it blurs the lines and also makes it difficult from an accounting perspective to track, because you'll need evidence, right, of these transactions that you've made. And if you can't show that clearly, it becomes challenging. So the easiest way to do that is to open up a business account.
All right. So this question is from Mutala, and I think it would need some reiterating from you because you had already touched on developing a business story in your pitch. His question is, what type of research do I have to conduct about a business story? So I think you can use the opportunity to just go over that again to clarify whether that's even necessary.
Okay, no problem. So essentially when you're crafting your business story for a pitch, as I mentioned before, you need to structure it in a way as a typical story, right? So your beginning, your middle, and your end. So at the beginning of this, what are you trying to let the audience know, right? How are you going to engage them? What's the thing that is extremely unique about your business, right? What's your value proposition? How are you going to hook them in? How big is the problem that you're trying to solve? How relevant is the work that you've already done in this space? Then when you transition to the middle of your story, this is where you're sharing the more finer details, right? So now you may get into the data based upon any type of feasibility studies you've done or any additional testing that you've done to validate certain assumptions you had about your business. This is where you may introduce the financials. This is where you may talk about your team. So you're now giving people the details to what you've hooked them into to better understand how your business solves a problem and also provides a solution that people actually want. Then you close with the ending. The ending is where do you land? Depending on your audience, right, or who you're providing this presentation to, you want to be very specific in how you're landing with them. So if it's more of a presentation pitch and the story of your business is simply to let someone know that you exist, this is what you do, you may land with, and now here's how you can buy more, or here's how you can learn more. And you say, go to a website. And then if it's for an investor and you know that at the end of the day, you're seeking some level of capital, you're seeking some level of assistance, whatever it may be, then now you incorporate your ask, you incorporate the offer, and you kind of show them how they will benefit by making such an investment to you. So that's really how you frame your process of crafting your business story.
All right. Well, the questions just keep coming in.
Oh, wow.
let me pick this from. Okay, so Ogunyemi Tope, you're asking, is there an opportunity to download this webinar later on? Yes, of course. It's live on YouTube and will stay on our YouTube page. So you're free to stream or to watch it after or to download it. So don't worry about that. There's an interesting question though, and he's asking, Peter from Nigeria. My slide has about 42 pages. Are you sure 1 minute will be enough to make a comprehensive and convincing pitch? So I think you want to put this in context for him, Joel.
Oh, wow. You should never have a deck that's 42 pages. Okay, here's something to be mindful of, okay? Couple of things you need to differentiate, and I've seen this happen with a lot of the entrepreneurs I've worked with. There's a difference between having a business plan, using your business model canvas, having an investment deck, having a presentation deck, and even having your one pager. There's so many differences. You have to be mindful of people's attention span. There are key areas that when someone gets a proposal from you or even a modified version of your business plan or your investment deck that they're looking at, right? They will skip a lot of pieces. And for some, if let's say you're going to a bank, they might look at information that you've provided about your operations in a sense, and then go straight to your financials. Can this customer or this potential borrower pay me back? That's what I want to understand. Then I want to understand a little bit about their business. How do they do this? How do they survive on a day-to-day? And is there a potential for them after they get this funding from me to grow, whereby within a year's time, they can effectively pay me back? That's all they care about. Everything else, they might not read, right? They just need to check off a few boxes. So when you have a business plan, right, that can be as long as you need it to be. But this is not something you're going to constantly share with the public often, right? This is going to be upon request. Someone may want to see your business plan. And this is a document that's a living, breathing document that updates as things change in your business. You don't just make it one time and leave it alone. So that can more than likely have a lot of updates as you move along in watching your business plan progress, or even migrating to the business plan for the next year. But when you have a deck, a presentation deck that you're presenting to anyone, by standard, a lot of times from a visual perspective, is expected to have no more than 10 slides. Sometimes the max you can go to is about 15. But again, it's dependent upon your audience and the type of pitch you're doing. So if it's a competition pitch, it may call for 10 slides only. If it's an investment pitch and they have specific things they are looking for to understand about your business, it may call for having 15 slides. But to have 42 slides in a deck is far too much. There's information you don't need to share at all. And when it comes to just even something you're presenting someone in a document format, 42 pages is far too much, unless it is your business plan and there's specific things they want to see from your business plan. So I would suggest, for one, cutting back and really making sure that, again, you're keeping this concise, because again, as I mentioned in the beginning, a lot of these pitches come with time constraints where you have 10 minutes, 5 minutes, or even maximum 15 to 20 minutes to present. You can't say everything you want to from a 40-page document in 20 minutes, even if that was the maximum. So cut back and go back to the structure that I shared. There's a lot of different structures online too that you have access to. Sometimes places, probably, I'm pretty sure like AgroMinds, may have specific things they want you to talk about, and they'll give you that. So make sure you follow those outlines and don't provide unnecessary information that people probably will bypass either way.
Right, great. So for the purposes of time, I'm going to skip on questions that might have their answers already featured in Jewel's presentation. So you can go through the webinar again after the session. I'm going to stick to questions that pretty much are connected to the presentation, but perhaps weren't specified or highlighted in the presentation. So I'm taking this question from, well, this is Peter. Yes, Peter again. He's asking, what's the difference between, or is there any difference or anything such like a business story and a brand story within the context of the pitch?
Within the context of the pitch. So I would say no, right? Well, I would say, yes, they're different. So your business story is capturing everything from an operations perspective to a start and an execution. So you're telling me what this business is, how this business works, why this business matters, and what you need from me or what you want me to do about this business. This is your business story. When we're talking about a brand story, a lot of times that's the messaging that you're conveying to someone about the value that your businesses uphold, or your values that your businesses represent, right? So that's a branding thing. Can people align with your brand? So are you sustainable? Do you source in a certain way? How are your practices in general, your overall practices from not only a company perspective, but even from a human resource perspective? Do you waste water? Like, all of those things are your brand story, but they are an aspect of your business story, but your business story is a larger story that you're framing for someone else. For an audience, specific audience. Excuse me.
Right. This is Bernard Musyoki. I'm sure he's from East Africa or Southern Africa. He's asking, suppose you had a previous business and genuinely or somehow you made losses with accounting proof and shut down. Are you disadvantaged for funding? Within a pitch, of course, when you're going to pitch, how do you articulate that? So there's still some air of confidence in the individual who seeks financing for another project.
I see. Okay. I wanted that last part because I wasn't sure if they were trying to pitch the business that closed or what was happening, but now I get it. So you're saying that you've had a business before, it failed in a sense, right? And now you're presenting something else And how do you still have confidence? So my question to you is that it may not necessarily, unless it's the same industry, the same type of venture, it may not be relevant to the investor to understand or unless they ask about it, your failed business, right? They may ask about your experience to validate that you are actually equipped to manage this. But the reality is that, there's so many conditions that allow businesses to fail. Succeeding is kind of the outlier for us, right? Successful businesses are far and in between, but we do have them. But there are a lot of businesses that fail. So it just speaks to why it failed is more important than essentially how it failed. And so if they ask, you can have a reason behind why it failed. And if it doesn't tie to your leadership or mismanagement of funds, or you didn't do the right things, and it just simply maybe was a timing issue, maybe, something happened economically that impacted your business, much like people are closing down now during COVID-19 or the pandemic, then you don't have to worry about that unless it was something within your practices that shows that you're irresponsible or your business idea was something that couldn't have grown anyway. So that's something to be mindful of. So you still maintain your confidence. There's several startups or ventures that have failed that have gone on where their founders or former founders have gone on to succeed and create other ventures that worked. So it just depends on the circumstances around that, but you shouldn't speak to it unless asked.
Right. And even just to lay emphasis, Bernard, like Joel said, it's about the story. So being able to create a story out of that experience is what connects to the investor in thinking twice about the fact that, you probably deserve a second chance. So your story build-up is very key, especially when you are going to a business that failed and he's keen on asking or finding more about why it did. All right. So we have a question from KR Foods. Ikechukwu from Nigeria. He's asking, can a growth stage agribusiness ask for a hybrid fund that is part equity and convertible?
Yes, so that's a mezzanine form of capital, and it just depends, again, it's more so around capacity. So all of that, it speaks to, again, from an equity perspective, do you have the I guess the financing in place whereby your business is profitable enough to show reasoning for providing a division of shares in some capacity. Then from a debt perspective or the convertible note, are you in a position to pay back whatever debts you're on taking or the investor is giving you in that capacity where they can eventually turn that into equity at the end. It's all about your financial positioning based off where you are within the growth of your company and where you are within your market, right? So that is possible for sure to answer your question, but it's really dependent upon what stage you're in within the growth cycle, where you are within your business, how much funding you are bringing in, and if this level of financing will propel you to further grow your business and enter into a larger portion of the market. If it doesn't do any of those things, then it's not necessary.
Right. And so there's Justice, didn't indicate, okay, Justice Ghana, right? He's asking, while developing an agro product, be it maybe in packaging or labeling or the flavor or what have you, what's the best way to find the market for the product?
So what's the best way to find a market for an agri product?
Yes,
when it comes to labeling?
Or packaging, okay.
So
or
that's
flavor, or basically.
Okay, got it. So again, it depends on where you are filling a need, right? Have you identified within the market? So let's say you're selling cashews. Cashews is a particular commodity a lot of people like, people sell, people get it, but you have to think about what's the market that has it in higher demand or a higher desire for this, right? And can you enter into a space where it's the way in which you package your cashews or present them that the market that you've identified would actually have a more willingness to buy this over the other. So you have to think about, I would use Ghana as an example. There's several vendors who, sell plantain chips, and the packaging for some are what attracts their particular market, because it shows that maybe, oh, there was more work put into the process and development of this. I will pay for it at a marked up price. And then there's some who are willing to buy plantain chips from the roadside, right? So it all depends about the market that you're targeting, your customer segment within that particular market. What are their desires and needs? Is there a potential gap in this space that someone else isn't fulfilling? And can you fulfill that by having either your value proposition be around the level of value you add to this particular product, be it through packaging, be it through enhanced types of flavors, what will be your value proposition to this specific market? And that's what you need to identify first. Then you need to create a couple of samples that you can begin to test and share and see how that market responds to what you've created before moving forward.
All right, so we'll take two more questions as we are pretty much actually almost out of time. So this is a question asking, how long should be running? Okay, I have to rephrase the question because of, right. So how long should an agribusiness in Africa be running for before approaching an investor for cash or whatever form of investment?
No problem.
Is there an ideal time or period that an agribusiness should be operating or should have operated in order to attract financing?
So I want you to remove the constraint of thinking about time, and it's actually what you do within the length of time that you exist. Now, it's ideal to, of course, to use your time wisely, to means that that's why I said in the beginning, you're setting benchmarks and milestones for your company as you're developing. And as you're actively, progressively testing, validating, and moving your product or service further into the market where people are actually paying for it, you have your first customer, they're buying it, and you're going back and iterating once you get feedback, all of these processes, right? That can take up to a year. But maybe you have a process or a system that enables you to do this more effectively in even 6 months. But again, it's about the numbers of impact, like how many people have you been able to target, reach, test, to get feedback to actually modify what it is that you've created. And then, how many, if it's an agri-tech product or something, how many users do you have? All of that becomes important, more important than saying the time. Now, the counter to that is if you've taken 5 years and in that 5 years, you've been slow to move, right? You haven't done the testing, you had a gap here and there, and this happened. If that story is coming out and in 5 years, it takes you what someone did to do the same thing someone was able to do in 1, the likelihood of an investor going with someone who's done this in 5 years, and the evidence shows that the 1 year time period 1 or time bound 1 is projected to do more, they can double this in year 2, double this in year 3, then they would probably invest in that instead of the one who took 5 years to do it. And there were so many gaps in their processes. There wasn't a really sustainable way in which they did this. Maybe they finally get it right in year 5. I would not necessarily be prone to just it unless you've had 5 years of great traction, great history, great experience, and you're coming saying, I need this level of investment because I'm going to take it to the next level. So those are some of the constraints, but I wouldn't say that there's a time period you have to think about, but you have to think more so about the efficiency of your operations, your processes, your vision towards the end of this, your benchmarking, your milestones, and you actively producing results throughout your experience before you approach an investor to prove to them that you can actually double down on what it is that you've designed and created.
Right. And so I'm going to take this last question from Shaka. And I like the way he puts it. He says, hello, presenter. Is it ideal to state or include one's physical assets in a business plan or in an elevator pitch?
Physical assets from a personal perspective or physical assets of the company?
Well, he didn't state, so we may have to look at it from both angles.
Okay, so when it comes to personal assets, you don't necessarily have to put that in an elevator pitch or a business plan. Typically, when it comes to personal assets and what you may have and your value, that a lot of times is what sometimes banks want to know. So when it comes to loan financing, there may be some venture capitalists that want to know that information as well, depending upon the nature of your business. But for the most part, to present that in a pitch is not necessary. That may come later on in the due diligence period where they request, personal information from you and general management, but that's not something that comes up typically at the forefront. Now, if you're talking about the physical assets of the business, you have to show the relevancy within that in your financials and how you're presenting that. So if it's something that speaks to the value over time of having your warehouse or having a particular, tractor or this or that supports the production of you producing or creating at a more efficient time, then it is relevant to share that you do have such assets that exist, and this is, their livelihood and how they impact your day-to-day operations. So that's from the business side. But when it comes to personal physical assets, again, you don't necessarily have to present that unless within a due diligence period that is requested, or you're presenting in front of a potential financier that needs to know that information for transparency purposes.
All right. So I think this does it. This has been extremely enlightening. I'm speaking on behalf of every participant that made it a point to join this webinar today. Just as a form of, in the spirit of an announcement, of course, for those who have asked questions with respect to equity financing, we've seen a lot of questions that we've had to skip. We're having another session next or this coming Friday, the 4th, which is a series 2 or a part 2 of positioning your agribusiness to secure equity financing. Remember, we had the first session on positioning your agribusiness to secure credit financing. And so we'll have all those specific questions related to equity financing and all its accompanying terminologies and concepts in that particular webinar. So don't worry at all, we got you covered. And we decided to specifically address questions that had to do with, or that were closely related or directly related to this particular webinar presentation. So on that note, I'm going to ask if, Joel, you have any final words of advice and some words of exhortation to our teaming and highly motivated agro champions.
Yes.
Who have made it a point to make time to listen to you and what you've had to share.
Well, yes, first and foremost, I want to thank all of you for actually asking phenomenal questions, and the fact that you're impassioned this much about this sector on our continent is brilliant, because we need more of this production happening. We need more innovation in this space. We need more of you to be mindful of how we add value to the products that we do have, so that we too can start to export the things that come from our continent. So I commend you for taking this step about being serious about your business, and I want you to stay the course, because entrepreneurship is not for everyone, but for those of you that find the grit and the will to maintain, it gets hard, but it's so worth it as you begin to produce. So find yourself a good mentor, find a good advisor, find a good advocate for you, right, who can go out and speak before you and get you into the rooms that you need to be in. Find good programs such as this one to help support you and help provide you with the funding and resources you need to move forward, and keep asking questions, because without asking questions, then you essentially kind of stall yourself. But ask questions. Don't be afraid to fail. Don't let failure be a thing where you're like, I've done something wrong, or this didn't work out for me, I'm going to stop. Let it be a learning lesson and a catalyst for you to do better, and recognize that there's an opportunity for all of us on our continent to produce really great things, and especially one within this sector. So I thank you for your time and your commitment to listening. I'm available if you have questions. I have also a good network of people you can connect with. We have an amazing team at Ashesi, those that focus on agribusiness in particular in our community, that can also you can reach out to them and find out more. And a big thank you to Stephen and your team here for inviting me to speak on today's panel. I've enjoyed myself, even though I've lost my voice.
Thank you so much. We are done here. Thank you.
Thank you. Bye-bye.